think the bottom line is that if you think about it, 2 months ago, when all the bad news was coming through and the Prime Minister was talking about hibernating for 6 months, we had no idea of how bad it could be. And I think we saw predictions about death rates that could get into the millions. And clearly the success, particularly in Australia, but even around the world, has actually surprised so many so-called experts. And the bottom line is, if you imagine that our stock market fell by, 37, 38%, it has now rebounded about 21%. So it's like the problem has been cut in half. If you imagine we're 2 months into the containment policies, there's a very good chance, and I'm sure you're suspecting that by June, there's going to be a lot of normal activity coming back to the Aussie economy. Now, that's 3 months rather than 6 months. So in a sense, you've chopped the problem in half, and the stock market has reflected that. And I think that lies behind the bounce back of the stock market.
My eagle eyes yesterday on the share market, Pete, showed that the banks have recovered quite well and resources have rebounded quite well as well. I noticed also that Woodside's back on top after taking a bit of a drop last week when we were talking about it. What's behind that, though? Banks are back on top, and as well as the rest of it. Yeah,
well, the banks have cut themselves a bit of a deal by either, in the case of NAB, cutting their dividend, or in the case of ANZ, deferring it. And by the way, I heard the ABC saying that they've dropped the dividend. They haven't dropped it, they've deferred it. So they could end up dropping it, but the bottom line is that if the very same story I've just put to you, that things aren't as bad as we first predicted, then, and by the way, I think the banks are working off the worst case scenario to work out what the position of their balance sheets might be in 6 months or 12 months' time. And remember, the banks have also been recruited by the government to be really nice, like deferring loans, and we saw business loans were the biggest in 32 years. So the banks are actually being asked to cop reduce profits or even losses to try and save the economy. So therefore, they're saying, well, okay, if we're going to be hit that hard, we're going to have to restrict the dividends. And so if you restrict the dividends, the bottom lines of the banks improve and share prices go up. But also the fact that you think that the economy is getting better, well, banks are going to be the best recipients of a better economy compared to what was predicted, say, 2 months ago about a 6 months hibernation. You can see the whole thing links in really carefully. And when it comes to commodities like oil or iron ore, if the world economy is bouncing back, what do they buy? They buy iron ore, they buy energy products like gas and oil, and that's why they're improving as well.
Yeah, so just quickly, you mentioned that word hibernation. I've kind of noticed that the PM's really walked back that language. He's not really talking about that anymore. So is this at the point where we start really taking economic data seriously?
Yeah, I will take economic data seriously once I think we've hit the bottom. Like, for example, one piece of data point I am considering is consumer confidence. That has started to come back, and that's really immediate. It's weekly. It's looking at the containment success, and it's coming back. But looking at like this business loans highs in 32 years, well, they've been forced to do these business loans. I want to see us get to the bottom, and then what's the rate of improvement? That's the stuff that's going to be critically important for working out whether the stock market rebound is justified, whether we can be more positive about the economy going into the September quarter than the December quarter. The economic data will be important, I think, in about 2 or 3 weeks' time.